How's it going, peeps? Welcome back to Viva La Coin. I am Joe. I will be your host for today's episode, and I promise this time I'm going to keep it short. I know the last couple ones have been a little bit longer just because there's a lot to talk about, but realistically, not much has occurred in the market that I haven't already touched on in my previous video this past Tuesday. Now, I did say that based on that Wyckoff distribution model that they ran in dumping the market down, that we were going to hit a point of reaccumulation for these institutions and anyone that wants to buy cheaper instead of buying the top. Now, it makes a lot of sense. They're not going to want to buy in at the absolute height if they can shake everyone else out of the market. And that's exactly what we saw, retraced all the way down to 30K, which most people believe is the bottom. And then we had a pretty heavy bounce. Now, like I said in my previous video, my game plan was I believed that we were going to start climbing back up towards one of those couple resistance zones. In this case, it was the 41K level. And at that point, if we bounced and we were going to retrace, I took some profits on some of the quick recovering altcoins that I was in, like Matic or Cardano, and then waited for the retrace, and I'm buying back in cheaper currently, just trying to accumulate a little bit more in this pattern. Aside from that, I don't really long, I don't short, I don't put in trades and liquidate myself like a bunch of masochists out there. I'm not looking to fuck myself up in an incredibly unpredictable and volatile market. However, if you did follow that advice, although it was not financial advice, think of it more like personal advice, or at least what I'm doing. But again, remember, not a financial advisor. I'm not an oracle, nor am I a fucking wizard. But if you did, hopefully that worked out for you. Aside from that, I'm just going to give a very brief update. Going to try and keep this video around like 10 minutes. There's no point in digging into the same thing again if we're just going to trade sideways or wait for a move. But I want to give you my thoughts as to what I think is going on currently and why I still don't believe that we're going to see like a full-on multi-year bear market, regardless of how many people call for it in their technicals. I get it. The technicals are showing, yes, we should continue to dump it, but the volume is low because we absolutely obliterated almost everyone in the market that wasn't a market maker or just a hodler. And you have to expect that people are going to be tentative in getting back into the market, especially with some swift up and down pushes. But if that price dips down to like 20K, I can guarantee you I'm going to go and dig out coins out of my couch cushion to buy more. And I'm pretty sure everyone else on the sidelines, both institutionally and retail-wise, are thinking the same. We have a series of updates that are about to occur in the market that really add a lot of functionality to just about every major crypto that people are keeping their eyes on. And I'm going to show a couple of those really briefly. And, you know, it's really, in my mind, that's what I'm focused on. So right now we're trending around like 35K, which that's okay. I still think that when we get this final press downward, we may even wick below 30K. I would not be surprised by that. But if you remember that Wyckoff distribution model that I showed the last time, where it kind of built up and exhausted all the traders and then eventually dumped, well, there's the following part of that, and this was the chart, right? We went up, there was like our peak in Feb, March, April, and then we came back down, and that phase E was where we dumped down to 30K. But on the other side of the coin, there is a reaccumulation phase that occurs afterward. So once we get down to that bottom, which most people believe is 30K, we start to hit this pattern of reaccumulation. And as they go through those stages, usually when this is deployed in a traditional market, it can take months and sometimes even years to get these full patterns painted out. But crypto moves much, much quicker. And since the bull run itself, due to the halvening, has a certain expiry date on it, you have to try and see if we're going to launch into this a little bit quicker than what most people think. And I wanted to show you a clip. I'm not going to play the clip because I know the volume's still going to be fucked up if I try and play it, but I'm just going to show you a paused frame from it. And this was from BitBoy Crypto. And although I watch him, it's more or less I want to gauge what he's telling his audience because he does have the largest YouTube crypto following. I don't always agree with the stuff that he says, but in this case, I did find it interesting. So he has that same redistribution accumulation phase. So when he transposed that over to the charts, and you can see it's probably a little bit smaller for you, but the candles for Bitcoin in that dump and then what we're following right now follows it to a T all the way to about this point. Now, with Memorial Day weekend coming up, as well as futures expiring today, the market's already volatile. The fear's through the roof. I would not doubt that we couldn't on Sunday get down to this phase of a spring and launch ourselves back up. And I believe that he had this on like a 3 or 4 hour candle timer. Now, could it be completely incorrect? Sure. I mean, it could just drop through the floor and none of this matters at all. But I find it very odd how distinctly it lines up with those movements and how everything is unfolding, even though the volume's been pretty low for the most part when it comes to different cryptos. So that's what I'm going to be watching this weekend. I would like to see us dump down to like that 30K level again because I have those sideline profits and I'm going to put it back into the altcoins that I believe in just because they're going to recover the fastest if we do take a sharp dip down. But what I want to think about is institutions when they're buying into cryptocurrencies. It isn't just Bitcoin. Many of these large institutions, especially in the news and CNBC, and a lot of these financial advisors, I think it was even Goldman Sachs, Guggenheim, they're all talking about Ethereum as well. And Cardano had a lot of investors come in, and they actually had the most net positive inflow of institutional investment over this past 7-day period. So when those institutions see the value of DeFi or they have these different updates coming up, both Ethereum and Cardano, as well as Polkadot and a series of other cryptocurrencies, have massive functionality updates occurring over the summer. Most of them are around like the July-August timeframe, some before, some after. But it doesn't make a lot of sense to me that they would be purchasing a ton of Ethereum. Even some of them were buying around that $2,000 range, just to completely tank it into the ground and then try and consider like what people aren't going to buy when the shit actually fucking works. It just doesn't make sense to me. So we're talking about you have, and I'm going to cover that story in a minute. You have Ethereum's EIP 1559 update, which is during their London hard fork, which occurs on July 14th. This will essentially make Ethereum deflationary, which just means that instead of an unlimited supply of Ethereum that will continue to be printed or created for its use case, it would essentially burn the Ethereum, or at least some of it, when you use it in transactions and counterbalance that. So it would make it more scarce, almost like Bitcoin. And a lot of people would start to view Ethereum more in a store of value as well. You have other updates with Cardano. They just announced yesterday through IOHK, which is their company that handles the business side. The Alonzo rollout plan is going to occur in 3 different stages with increasing operations and functionality on that mainnet. And purple is really when anyone and everyone can start having their projects go live on the mainnet, and the official mainnet goes live around September. Yeah, people are pissed because the timeline keeps getting pushed, but Ethereum was celebrating like 5 million staked Ethereum so far, and there's 116 million in circulation. So I think that they're each doing their own thing very well. So Ethereum had DeFi first, network effect, they were first there. However, they have issues with not being fully staked and having ETH 2.0 set up. Then you had Cardano that had a little bit more of a slow burn, let's do it right the first time approach, and they couldn't really go out and put all their DeFi applications out. So they each have their own fundamental strength, and that's not the only updates coming out. So you have Polkadot, whose parachains are supposed to go live over the course of the next couple weeks. Kusama, which is their testnet, essentially, where those parachains will be launched and go live through the Polkadot chain. They just announced that some of their updates in order to run those parachains just went through. So everyone is getting incredibly excited about that. We have Chainlink going through a big update to help scale Ethereum and help with some of the costs. And that update is called Arbitrum. And all that essentially does is it's going to help Chainlink node operators operate as validators of Arbitrum secure off-chain computation protocol. Developers can build smart contracts using an entirely new approach to secure off-chain computation, providing previously inaccessible scaling for running Solidity and extreme improvements in cost efficiency. So Chainlink, another massive crypto that everyone not only needs in order to get information on and off of blockchains and DeFi, but one that everyone's bullish on and everyone's holding, and institutions are starting to get their eye on as well. And even a little bit of a less popular one, but one that I'm really big on, I have a pretty big holding in. Cosmos launches their Gravity DEX, which is their decentralized exchange. That goes live at the end of June. And they have a bunch of updates and some interoperable blockchain stuff coming out with that as well. So you have all of these different things all occurring at once and everything about to go live. And this is where the real value of these cryptos lie, not just in speculative assets, but in the actual application and use case when you can go out and onboard people and do all the functionality on all of them, not just some DeFi on Ethereum. And it doesn't make a lot of sense to me that with all of this information about to take place and Bitcoin just signaling that they should be clear for their update, which is Taproot, all the Bitcoin developers that really take their time and they're very hands-off on the network. They're all the mining pools and everyone else, they're voting on this protocol. And all Taproot does, and I'll talk about it in a separate video, it is a way to make transactions more private in a way. I'm just going to leave it at that because I want to do a separate video on it. But with all of this information about to, go live, it doesn't make sense to me that we would plunge deep into a bear market and everything would be much more undervalued once functional than it was prior. That's just me. So I'm just going to hold my profits on the side and wait for this accumulation phase to pass. And then from there, we'll be able to figure out when it looks like we're going to enter this phase C, which is where we would spring up and start gaining momentum. Personally, I would like it to occur closer to July. I would still like to hover around here for a bit and let everything recover. If we shoot up too quick, then that just raises the odds that we're going to dump back down quick. So if we take a little bit of time here, let everything cool off, let everyone either panic or accumulate, and then we move, I think that would be best for the entire crypto space. But ultimately, nothing else has changed in my view. I'm just going to keep status quo on the side with my profits, just waiting to see how this unfolds. I wouldn't suggest, buying the dip 18 times because it always does come down to you don't know how far that dip is going to go. I would just, if you are in profit in anything and you do want to take it out so that you can redistribute, just be careful with, taking everything off the table or going all in when it's down. I view it more of an opportunity to dollar cost average and to be able to take a little bit. If I see it down, put a little bit in. If it goes a little bit further down, maybe I'll put a little bit more in. If it goes up a little bit, I'll take a little bit out. If it goes up more, I'll take a little more out. And it really averages everything out, and that way I don't get caught on one end of the spectrum if it falls through the floor or if it shoots through the sky. Aside from that, just want to give you guys a quick update. If you have any questions, comments, concerns, or if you just want to say hi, help the algorithm, or leave a like on the video, go ahead and drop that down below. I'm honored, as always, that you join me on this channel a couple times a week, and I will catch you guys next time.